Wall Street is opening a new trading week cautiously higher. Investors eventually dispelled default fears and gained confidence in the pending pause in the Fed's aggressive monetary policy. Today, the market is focused on a series of PMIs, so a rally on Wall Street could be subdued. In the light of the highly anticipated non-farm payrolls for May, the benchmark stock indexes closed on a Friday at the multi-month highs. The Dow Jones jumped by 700 points or 2.12%. The Nasdaq climbed by 1.07%. The S&P 500 rose by 1.45% to close at 4,282 points. The major stock indexes opened quietly on a Monday. Futures of the US stock indexes wavered between minor gains and dips in the New York pre-market. The S&P 500 is expected to trade in the corridor between 4,240 and 4,310. The overall fundamental picture was enough to push the S&P 500 and the Nasdaq to the highest level in nearly 10 months. Besides, the Nasdaq closed with weekly gains for 6 weeks straight, the longest winning streak since January 2020. The U.S. public and private sectors showed robust hiring in May. The jobless rate increased to 3.7%, the highest rate in 7 months. All in all, conditions in the U.S. labor market are getting weaker. Indeed, the unemployment rate rebounded from 3.4% in April, the lowest level in 53 years. It means an increase in the labor force. In turn, this eases pressure on businesses, enabling them to raise wages and drags down inflation. Despite the employment growth, early earnings rise at a slow pace. The report brought relief to investors who are betting on the Fed's pause in rate hikes at the meeting in June, and it will be the first pause since the Federal Reserve launched aggressive monetary tightening more than a year ago. Late on Thursday, the Senate passed a bill to raise the $31.4 trillion national debt ceiling. The news also had an impact on market sentiment on Friday. The vote eased default worries, so the week's fear index fell to its lowest level since November 2021, slipping 1.1 to 14.6 points. In the corporate sector, shares of Verizon Communications, AT&T, and T-Mobile United States declined after reports that Amazon was in talks with the U.S. telecom companies to provide low-cost wireless services. Verizon shares fell by 3.2%, AT&T and T-Mobile dropped by 3.8% and 5.6% respectively, while Amazon shares added 1.2%. All 11 sectors in the S&P 500 went up, with the materials index leading the way, having climbed by 3.4%. Consumer goods sector, which includes Amazon, trailed behind and was up 2.2%. Nvidia shares were down 1.1% on the second day of decline after briefly entering the elite trillionaire club on Wednesday. For the week, the S&P 500 rose by 1.82%, and the Dow added 2.02%, and the Nasdaq gained 2.04%. Wall Street futures were subdued on a Monday after a solid increase last week. After Joe Biden signed into law the debt ceiling bill, attention shifted from the default back to the Federal Reserve, and the market moved on its favorite business, speculating about the further Fed's agenda. Better than expected job growth in May, coupled with the signs of a cooling wage growth, has revived investors' faith in a soft landing of the economy. As the Federal Reserve enters a period of silence ahead of the June 14 policy decision, the futures markets have a slightly more than 1 in 4 chance of another rate hike this month. Traders estimate a 77% chance that the Fed will keep interest rates at 5 and 5.25% at its meeting in June, although they expect another hike in July. While AI and the big tech stocks have led the way this year, up more than 65%, and Apple nearly missed all-time highs last week, and the stocks gains have also shown some signs of expansion. May data from the United States services sector sets the tone for market sentiment on Monday. The S&P Global and the ISM surveys of U.S. services sector activity in May will be released after the opening bell. Cleveland Fed President Loretta Mester is due to speak at an event later today, which could have an impact on the market. In terms of individual segments and the companies, energy stocks including ExxonMobil and Chevron rose by about 2% each in the pre-market as the oil prices jumped by 2% after top global exporter Saudi Arabia vowed to cut production by another 1 million barrels per day since July. Shares of large U.S. banks were mixed after the Wall Street Journal reported that U.S. regulators are preparing to tighten rules on large banks, which could include raising their capital requirements by an average of 20%. Bank of America shares edged up by 0.1%, while Citigroup shed 0.2%. Apple shares rose by 1% ahead of the annual Software Developers Conference, where the company is expected to announce a new mixed reality headset. The US dollar is asserting its strength, unwilling to slip below 104 points, despite waning default fears and the lack of support as a safe haven asset. The greenback is poised to open the week in the green. Its index inched up by 0.2% and rebounded to 104.30. The intraday corridor for the index is seen between 103.90 and 104.60. The US dollar advanced across the boat on Monday following a slump last week. It's still propped up by the Federal Reserve and the likelihood of another rate hike in July, if not in June. Despite an expectantly robust employment in May, analysts reckon that the US Fed has leverage to suspend the cycle of rate hikes. Indeed, wages growth slowed down and the unemployment rate grew from the lowest level in 53 years. The U.S. services PMIs, which are due tonight, could give additional clues to economic conditions in the United States. The only clear-cut indicator, namely the CPI, will be published next week. The lack of crucial macroeconomic data before the CPI will cap US dollars moves. The speech by Loretta Mester tonight could give a fresh impetus to the greenback. The Canadian dollar is discouraged by the greenback's advance and the USD CAD pair edged up by 0.05% intraday to trade at 1.3430. The instrument is likely to trade in the corridor between 1.3380 and 1.3450. The loonie is staying afloat today thanks to a rally in oil prices. Brent crude futures jumped by 2.4%. to trade at $77.87 a barrel, and WTI futures appreciated by 2.2%. Both contracts added more than 2% after Saudi Arabia's energy minister said that the kingdom would cut its oil output to 9 million barrels per day from July, from the current rate of almost 10 million barrels. It will be the sharpest output cut in Saudi Arabia in the last years. The voluntary cuts complement a wider OPEC Plus deal to limit supplies until 2024, as the cartel seek to encourage a fall in oil prices. Analysts suggest that additional cuts in Saudi Arabia will widen the market deficit to more than 3 million barrels per day in July, which could push prices higher in the coming weeks. Goldman Sachs defined the OPEC summit as moderately optimistic for the oil markets, and the decision could boost Brent prices in December by $1 or $6 per barrel, depending on how long Saudi Arabia maintains production at 9 million barrels per day over the next 6 months. The crypto market is opening the week on a pessimistic note. Bitcoin failed to develop a rally from 27,100. It traded in the red on a Monday. The crypto lost 2% and skidded to $26,700. Popular altcoins are also trading lower. Binance once again came under the spotlight on a Monday, and the media reported that the crypto exchange controlled the bank accounts of independent affiliates in the United States. The senior Binance chief executive was the primary operator of 5 bank accounts owned by an allegedly independent U.S. affiliate, including an account that held funds from the U.S. clients. U.S. lender Silvergate Bank has authorized CEO Yuanjin Chen, a close associate of Binance CEO Chang Benzhao, to manage the accounts in 2019 and 2020, and this allowed Chen to move funds held in banking accounts. The new results provide additional insight into how Binance exercised tight control of Binance.US, despite both firms claiming they have always operated independently. In addition, discussions continue on a potential replacement for the head of the crypto exchange. Richard Tang, Binance head of regional markets outside the United States, is seen as the most likely candidate to replace Chang Benzhao. The issue of a succession has taken an additional urgency as the company has been scrutinized by the United States in recent months. In an interview with the CoinDesk, Tang dismissed the idea that he was being groomed to take over from the 46-year-old CEO. As for Bitcoin's intraday outlook, the token is trading comfortably in the corridor between $26,700 and $27,300. It's likely to remain in the flat market. If it exists any of the borders, the price could either retest 26,200 or grow to $27,600 and $28,000. And that's all for today. We keep monitoring the financial market situation and wish you successful trading day ending. Subscribe to InstaForex TV channel and see you online tomorrow.